Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, May 15th, 2022. Hope you're having a great weekend. We've got members of the media, academia, and financial services standing by as we analyze all the news and events for the week. So sit back, relax, enjoy this episode of BRN Sunday. We're going to kick off the show with a look at what's happening on Capitol Hill in terms of litigation, regulation, and legislation. Joining us on the line, you know them as the Legal Eagles, but we also know them very fondly as Dave Levine, Kevin Walsh. Both are principals with Groom Law Group, an employee benefits law firm based in Washington, D.C. Gentlemen, thanks so much for joining us again on the program this morning.
Jeff, as always, thanks for having us. Listeners, thanks for joining us. We know, we're rolling towards Memorial Day weekend, so we're excited to be here and recognize summer is right around the corner.
Kevin, summer's here. The time is right for dancing in the streets, but I know we wanted to kick off this episode of the show, with a discussion, a look out towards the election. Here we are in month 5. The election will happen the first Tuesday in November. Want to get yours and David's thoughts on what we could see in terms of retirement policy.
Yeah, in election years, when the weather starts heating up, people start, thinking about the fall and what the consequences of the election could be. And so really there's two ways that we should be thinking about the election and its impact on retirement legislation. The first is, between here and the election. And we've talked about this a couple times, and so I'm not going to spend much on this, but you've got Secure 2.0, which is another retirement bill that's pending in the Senate right now that they're working on. There's going to be a markup, I believe, next week. And what's interesting about it is that, Congress has been, Democrat majority in the House, Democrat majority in the Senate, and still, less has gotten done than, many Democrats would have expected. And, the partisanship has been hotter than many had anticipated. So, looking at this, with Secure 2.0, there's an opportunity for bipartisan legislation if going into election season, both parties think it's in their interest to work together. So the other way that this could impact is, post the election. And, right now the speculation is that it's likely that Republicans have an advantage in terms of taking the Senate, and Republicans have an advantage in terms of taking the House. If that happens, there's some pretty real consequences. First is it becomes tougher for nominees to get confirmed. When we look at EBSA right now, you've got, Lisa Gomez, who's been nominated to be the assistant secretary running the organization. Her nomination hasn't gone through yet. If we find ourselves, come next January and hasn't gone through, then it becomes, more of an uphill battle to get anyone confirmed because, without a majority, you can't get people through. Now, typically, the minority party, the majority party, they work together, and they'll find nominees. There's nothing in that I'm aware of that indicates that Lisa Gomez is a particularly controversial pick. So, I'm just using her as an example of someone who has a nomination that's out there. But that's something to watch. The other thing is that, when we see bipartisan retirement legislation, because, the presidency will still be Democratic, you'd expect to see more Republican flourishes in the bills. So, in Secure 2.0, it's a bipartisan bill, but if you look at who holds the pen in the House and who holds the pen in the Senate, it's the chair people of the committees that are running these things. And, right now, the chair people are Democrats in both committees. So should there be a change in control, we would anticipate seeing, a little bit more Republican lean in bipartisan legislation. And the last area where I think there'd be a real change is that in terms of oversight, and here, where you've got, a president of one party, and, both chambers of Congress of the same party, you tend to see fewer investigations. If a party has one of the chambers, then they have, powers to subpoena and powers to, schedule hearings. They control the calendar and they control, where resources are being allocated. And so I think if there is a change in control of either chamber, we would anticipate seeing, significantly more investigations or oversight hearings into, what agencies are up to, and that could involve DOL in many ways. So to me, those are kind of the three big things to look out for with the election, and if there is a change in control, but there's a long time between here and November, so things could change. And just because it leans one way today doesn't mean that's going to be the outcome. David, is there anything you want to add?
You know, for those who watched the movie Old School about 20 years ago, Will Ferrell debates James Carville in the movie, and James Carville said that was perfect. Well, that was perfect. I got nothing to add. That was fantastic, Kevin.
Gentlemen, I just want to ask one question. And when I think last spoke, we talked about the cryptocurrency regulation and the fact that there was some concern that it was just posted on a website. If we have a shift, and I think this kind of goes to what Kevin was saying, but I just want to make sure I understand. If we have a shift in Congress and the Senate, the Congress has the power of both of those bodies have oversight committees. Would we see, if there's a shift in party, could we see an evaluation of, for example, of the process to post regulations like that? And I think you had intimated last time that was a concern, I think, for both parties, of just not following the process that had been followed in the past. Long-winded question.
Well, that's a really good question, Jeff. I definitely think if you see party control switch, they could start asking questions about, maybe it's not, did you do this type of Administrative Procedures Act step? I think you're more likely to see topical type of focuses. But of course, remember, retirement has historically been one of the more bipartisan areas. So yes, you could see more inquiries, you could see more questions, you could see more pushback. But I think we have to wait and see what happens as we go forward. And yes, there's lots of questions. But remember, whether you're a Democrat or Republican, there were challenges. People didn't, on some sides, love what was done on ESG in the Trump administration. There's many people who don't like the brokerage window crypto discussion now. So I think there's a real chance that this dialogue will continue no matter who retains power, whether it is Democrats or Republicans.
Last question for you, gentlemen, and then I'll leave you alone for the rest of the weekend. There's obviously some, and this is not, I don't want to get into the politics of this, but obviously there's a lot of concern around inflation and the market. How does that factor into, the passage of secure, like, are there provisions that could help Americans save given, like, I understand the lack of tax receipts if people don't have money if aren't earning money, or et cetera. But how does that factor into this conversation outside of the political, hey, who's going to get elected, who's not getting elected? I don't want to talk about that.
And Jeff, that's a great question. And, inflation puts retirees under pressure because it eats into their standard of living. In some ways it raises concern. It does put the spotlight more on retirement. To me, the big impact that we see with inflation is it highlights the need for people not just to save for retirement, but to get an investment return on the money they put away. Because, what inflation shows is, you put your money under the mattress and it's that little gremlin that eats that capital unless you get a return. So it kind of highlights the need to balance saving with, seeking out a risk-adjusted return net of fees.
Yeah. David, anything you want to add before
I'll add one
go
thing.
ahead. Sure.
Yeah, so I'll jump in. In Secure 2.0 and in different iterations that have been around, there have been discussions of indexing things like IRA catch-up limits, or other type of increased catch-ups. Clearly, in an era of inflation, having higher dollar limits, which allows people to save more, which in some ways allows them to try and recoup a little that might be eroded by inflation, is a key item. But don't forget, of course, that a lot of the IRS limits are already indexed, whether it is the deferral limit or whether the maximum contribution limit. And given that, you're going to see some pretty notable spikes in those numbers if inflation keeps going, unlike where we were for many years recently, where it felt like the IRS limits never moved. So that's a direct impact, and I think it could also impact some of the dollar limit numbers that you see tossed about in legislation. But we'll have to see what gets into the Senate mark in the coming week.
Yeah, and it just goes to show you that this stuff is all interconnected. This stuff meaning the politics, the investments, the inflation, and litigation and legislation. Gentlemen, we're going to leave it there. Really appreciate you joining us on the program, breaking it down for us. A little bit of an election primer, and we'll kind of see how things evolve over the next 6 months. Have a great rest of the weekend, and we'll talk to you again very soon.
Yeah, thanks for this on. Thanks for
Bye, guys.
Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
We're going to close out the show with a look at what's happening in financial markets. Joining us on the line, you know him from the TD Ameritrade Network. He's the lead anchor there for Morning Trade Live and Markets on the Close. We're talking about Oliver Rennick. Oliver, thanks so much for joining us on the program this morning.
Hey, what's up, Jeff?
Okay, I want to hit you with a fact, a number that I read not on the TD Ameritrade Network. I was just perusing, doing some prep work. $7 trillion lost since the beginning of the year in the stock market. Reaction to that and your assessment?
It's a big number. It's brutal, but it probably looks like it's only going to get worse, just judging based on a few really important charts that have been very indicative of the price action in the market so far this year. So I'll start with Apple, which is probably the most important chart this week, as Apple shares sold off 5% 2 days in a row. It firmed up a little bit into the end of the week, but there is technical breakage on the chart of Apple in a way that we haven't seen since this market sell-off began in November. And actually, the broad tech growth sell-off extends now an entire year to the spring of 2021. But up until now, Apple had been spared, and a lot of people think about that company as a safety trade of sorts, a reliable, steady income stream of devices, biggest company in the world, most important tech business in America, etc. So to see that this week selling off the way it did and breaking down an almost 2-year-long trend line that had been holding, and just to kind of explain that real quick, basically, you could draw a straight line in Apple's chart since the mid-2020 of the COVID pandemic stock market boom. That began with all the stimulus and all the tech demand pulled forward, people refreshing all their devices while they're stuck at home, etc. It was a good environment for Apple. It was a good environment for a lot of tech. And so Apple shares, though, are not just about attacking growth. Apple shares are about buying stability and safety. And you could reliably buy Apple on every dip for the last 18 months. And that changed this week in a dramatic fashion. So to see that stock going off as hard as it did is a really major red flag. It suggests the pain is really just starting to take its toll, where you could write off the last year as a valuation correction in market, an overdue pullback of gross speculation fraud. But it's more than that. This is really a major unwind of a years-long trend, and it is powerful enough. These economic headwinds that the stock market is facing through interest rate hikes and no obvious stimulus anytime soon, if it can bring down Apple as it did this week, then we definitely should expect more to continue.
Oliver, do you think that it is directly related to Apple discontinuing the iPod Touch? I say that tongue in cheek, but it just coincidentally happened around the same time.
Yeah, it was pretty funny.
Let's talk a little bit about Twitter. We're recording this on it's an afternoon here on the East Coast on Friday. It's late morning there in Chicago. Elon Musk announcing that he's going to put the Twitter acquisition on hold. How much of that is market driven in your estimation versus, hey, we found spam bots and things and we need to assess this first?
I think that it would be a little bit naive to not think that Musk is very conscious of the stock market sell-off, both in his company, which he's using to finance it, as well as the overall stock market sell-off that probably means Twitter is not worth as much as he thought it was. So when you see everything in Twitter's category of growth, tech, or social media under immense pressure, and Twitter shares holding up because Elon has a bid in it, if I were him, I'd probably back away too and see what price the stock falls to. I'd also, with Tesla's sell-off, which got pretty nasty over the last 2 weeks as well, that complicates his funding for the deal. I'm not surprised by it at all. It's probably more about the market than it is the bot.
Oliver, a lot of people kind of always cue in on what Jerome Powell, who was the chairman of the Federal Reserve Board, has to say, right? I mean, I know you talk a little bit about it on your network. Others do as well, and they really key in. Let's talk about his recent appearance, I think, on a podcast where he was talking about rate hikes and keeping it at 50 basis points. Did that clear up anything for the market, at least in your estimation, as you're seeing the charts and the trading take place?
I don't think so. I think it is more of the same. There was an important distinction that I think has been obvious and implicit, but he did make it explicit here for those who haven't gotten the message yet, which is that data dependency, like I said today, means data dependency in both directions. We've become accustomed to hearing data dependency as being a purely relevant for slower policy and more accommodative policy to adjust for weaker economic data. But his point that he wanted to make clear here was that if inflation doesn't slow the way they hope, then they could easily ramp up those 50 basis points faster or bigger than they laid out so far. But the most important thing, I think, right now for investors to realize about the Fed is that there is a path here that is going to take time. This is not a 1, 2, 3 and done. The market does not expect that, and the Fed does not expect that. There is a habitual desire by investors only capable of going long growth assets, risk assets, crypto, people that have been kind of lulled into this false sense of security over the last decade that the Fed can only go one way and that they will be looking for an opportunity to lower interest rates or stop their hiking program. We have no indication of this right now. Very normal historically to see the Fed hike rates over a sustainable period of time And when inflation is at 8%, there is no sign of them reversing. They might go at a slower pace than 75 basis points, but I think a good reason why they might do that is because they know they have many hikes down the road. There is a lot of obsession over the peak inflation story, but much more important is going to be the level at which inflation plateaus and comes down. Because even if peak inflation is passed, who cares if that means we settle at 7, 6, 5%? Those will all be intolerable levels that will require the Fed to tighten policy, even if the economy slows.
And I have to wonder, this is just rhetorical, you don't have to answer, but I wonder how much the Fed takes into account. I know they're always thinking about the investor, the institutional investor, maybe to some extent the retail investor, but just the person on the street paying high gas prices, consumer prices. I mean, it's just really putting a lot of headwind for Americans. I mean, you can't save money if you're spending all your money in higher rent, higher gas, and higher food prices for your family. And I think that is not a good prognosis. I mean, inflation is I have to say, this is again my opinion, inflations are one of the greatest evils of our time.
Well, he says right now that inflation is way too high. And that is language that is very unique to this moment. Now, they would like that inflation to be caused by things they can't control, and some things they can't control, like supply chain dynamics from COVID. But there are things they can control too, which means they're not going to be dumping any more money onto the economy. They're not going to be cutting rates, like I was saying a moment ago. The things they can control, they are going to control. That means tightening policy, and it means not reversing. It means a steady course here until something demonstratively changes, because they're very well aware of the pain that it's inflicting, and the language that they're using is very clear and explicit that they are not going to tolerate inflation at this level.
Yeah. Oliver, well, it's always a pleasure chatting with you. I love how you wrap it up. Great analysis as always. Thanks for stopping by, and enjoy the upcoming week on your program. We'll check in with you very soon.
Thanks a lot, Jeff. See you.
And that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news and lifestyle, wellness, finance, tech, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content? Well, visit our website. That's www.broadcastretirementnetwork.com. And check out our streaming partners like Amazon, Roku, Samsung, over 100 more. We're back again tomorrow for another edition of BRN AM. Hope you can join us. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.